Welcome to the Professional Investment Podcast. I'm Charlotte Moore, award-winning journalist and founder of Moore Squared Communications. Each episode, we welcome a guest to the show to share their news story of the week. And I'm delighted to welcome Mark Fawcett, CEO of Nest Invest, to the show this week. Welcome, Mark.
Thank you, Charlotte. No, nice to be here.
Do tell us, what is your news story of the week that you'd like to share with us?
So my news story appeared on the Financial Times on the 8th of November, and it says, new Lord Mayor to push pension funds to invest more in London-listed companies.
And tell me, what was it about this story that grabbed your interest? Why are we talking about it today?
So there's been a lot of discussion about pension funds investing in the UK generally, and in particular in UK equities. And we are big believers in investing in the UK. We've got 13 million members, and we think there's some real benefits from investing in the UK. And I think we'll probably explore that during the course of this conversation. I think the important point to note around the UK equity market, and particularly the FTSE 100, is it's not really that attractive to invest in relative to what we've seen in other markets, because there's not that many growth companies. So the US market's done particularly well in recent years because we know it's full of high-tech companies that are growing really strongly. And for whatever reason, the London Stock Exchange has failed to attract those companies to list in the UK. And at the same time, defined benefit pension funds that used to be really big investors in UK equities have, because of regulation, been de-risking and selling their UK equity holdings. And so the UK stock market has performed quite poorly relative to say, the US. That's not a problem of our members making, and it's not for us to solve that problem. But we see real opportunities in the UK, and we invest 20% of our members' money in UK assets. It's just not really focused on the stock exchange, on the FTSE 100. In addition, when we're actually buying shares in the UK stock market, we're not providing capital for growth, typically for UK companies. It's just money changing hands between the previous shareholders and ourselves. And so if we're going to really help the UK economy grow and finance investment, which is what is really needed, then there are definitely other ways to be invested to help that.
Yeah, so we won't get into the particular political hot potato of what really is driving the lack of growth in UK equities. The thing that begins with B and ends in T might have had a little impact on that. But the point is, after all, you are investing for your members' long-term interests, and you need to make sure that you are selecting the best opportunities around the globe as well as in the UK. And if that can be achieved by investing in a global equity index, then it needs to be done.
Yes, and so right from the start, we had a view that we should be well diversified, particularly in our equity portfolio, and we don't exactly track a global index. We have a systematic strategy, and it's got things like climate tilts, and we exclude companies like tobacco companies. But where we are invested in the UK is in property, infrastructure. We actually buy a lot in corporate bonds, and corporate bonds are a way of financing investment in UK companies. And we've just recently, in the last couple of years, started moving into private equity, and we have holdings in UK private companies as well.
So let's delve a little deeper into how you do invest in the UK. You've touched on some issues there. Maybe we can start with private equity and talk about, because that's probably the other interesting angle, isn't it? Because the Mansion House Compact, which is referred to in that article, was about encouraging UK pension schemes to allocate around 5% to unlisted assets in the UK with a tilt towards private equity.
Yeah, so to be clear, the Mansion House Compact, which we signed, we're one of the first signatories, is 5% in unlisted equities. We didn't specify UK equities, and it doesn't include things like infrastructure equity, which we're also significantly exposed to. But within our private equity portfolio, we do have UK private equity, and we see a real opportunity, particularly in what you might call the scale up or growth equity category, so beyond early stage venture, but not in sort of leveraged buyouts. This is about helping companies who have got a proven business model they need capital to grow, and we're happy to provide that capital.
So it's that in-between stage, isn't it? After venture capital and before we get into really big private equity.
Yeah. But exactly. And so it's so-called mid-market, and we see a real opportunity there. And we've got 2 managers currently investing in private equity, and they do look at opportunities across the world, but that includes the UK, and we've got about 130 million pounds currently invested in UK private equity.
Yeah, just to sort of...
Yeah.
Sorry, go on.
Sorry, go ahead.
Just to kind of loop it back to the point about listed equity, the other thing that you told me many years ago is one of the issues that we have with listed equity, not unique to the UK, is listing itself and IPOing itself has become a lot less popular, hasn't it? So there is a point, isn't there, where if you want to access the full economy, you're going to have to go down private asset route.
Yeah, that's absolutely right. I don't know the numbers for UK, but in the US, something like the number of listed companies over the last 20 years has actually halved. And companies are listing later if they do list. And if we think about the growth opportunities in the UK and tech and biotech, etc., where we've got really vibrant opportunities, we need to access those through private equity rather than public, because as I mentioned earlier, if you look at the FTSE 100, it's not heavily endowed with tech companies.
No. So the other kind of area, let's move on to the other area of interest of the government, is not just private equity, but also we've had, it's definitely since Labour government has come in, and we've had a lot of discussion about infrastructure investment, and we're still kind of waiting on detail around that. Now, we've talked about that several times on this podcast with other people, and we understand well that the government is under pressure to find the money from somewhere when its fiscal scenario, its own balance sheet is fairly constrained. So it's obvious that they'll be looking for private investors. That comes obviously as a cost because you want the right risk return profile. And to be honest, we have had historical cases where infrastructure investment hasn't worked out so well. We talked about one last week with Catherine House when we were talking about Thames Water. And obviously there is a lot of debate as well about resuscitating the private financial initiative that we saw under the last Labour government. Can you talk to us about how you see pension scheme money can be funneled into infrastructure investment in a good way for everyone, for you, for the citizens of the UK, and for your members, obviously?
Yeah, and for our members, if you think about it, and this applies to investing in UK growth equity as well, is if we're investing in UK companies and UK infrastructure, then our members are benefiting from that. We're helping create jobs. It means they're likely to earn more, higher pension contributions, and you get sort of into a virtuous circle. So in the UK, we've been particularly focused on investing in things like renewable infrastructure. We think there's, the world clearly needs a lot more renewable energy. So we're trying to focus on areas which we think are progressive and looking forward. So across the whole of the energy transition, we need more investment in networks, transmission, batteries, generation. We're one of the largest holders of the Hornsey wind farm in northeast England, which at the time we bought it was the largest wind farm in the world. So, but we think there are lots of opportunities. So the UK government has talked about freeing up the planning regulations. So I read a stat that said it takes 13 years to get planning permission for an offshore wind farm and just 2 years to build it. So it's those sort of that grit we need to take out of the system, because I think there are lots of opportunities. It just needs to be smoother.
And is there an opportunity for maybe a venture capital infrastructure sort of like crossover, or not venture capital, maybe private equity, where you're looking either at newer green technologies, or the big issue that we still have to solve? We've got solar, we've got wind. The cost of doing solar is falling through the roof. no pun intended. But the storage issue is still an issue. I mean, in Norway, handily, you can solve the storage issue because you have a nice mountainous country and lots of hydroelectric power stations, so you can pump water up and then release it to come back down. Obviously, we don't have that same ability in the UK.
Well, it's happening in Scotland, and there's some real opportunities in Scotland. So we would definitely, we are really interested in that sort of space around at the edge of infrastructure and more slightly private equity. So we have a partnership with Octopus Energy, and they are pushing for us renewable energy programs across UK and Europe. And they invest, for example, in a company called Deep Green, which builds computer, basically sort of like servers, big server stations, I guess if that's the word, or server centers, and that generates heat, and then they're using that heat to provide free heating to the people who are prepared to host their servers. So there's a real green opportunity there, not wasting the heat being generated by the servers, but actually using it for heating purposes. So it's those sort of opportunities which are quasi infrastructure, which we definitely are interested in.
And well, let's bring in politics, dear boy, or events, dear boy, with Trump's victory last week. And there's obviously intense speculation going on what this actually will mean. It seems fair to assume that the politicization of sustainability will continue, and maybe the gap between how Europe views sustainability and the US views sustainability is likely to remain wide and possibly widen further. Does that make it difficult for you to invest in these assets globally, or is it less of a concern for you?
So I think the Inflation Reduction Act has been fantastic at helping generate new renewable power. And if you look at where the money's being spent, as everyone knows, it's, often in deeply red states like Texas, being real beneficiaries of this. So, Trump basically was suggesting he would basically cancel the Inflation Reduction Act. I think that's unlikely. I think he may scale back some of the benefits. And then you've got, Elon Musk, who was completely in the Trump tent as the largest manufacturer of EVs in the world. So despite a lot of the rhetoric in the US, I would see they would continue to build new renewable energy, build electric vehicles. Whether they pump a lot more oil or gas and more fracking, I suspect that's likely, and that's going to have an impact on the climate. But at the same time, elsewhere, there's clearly going to be opportunities for more renewable energy. And given, as you mentioned, solar power is the cheapest energy for electricity in the world. So why wouldn't we invest in that?
Yeah, my favorite stat about that is there was a great chart that John Murdoch put at the FT, where actually Texas is building far more solar farms than California, basically, because there's less problems with planning law. And Texas is in an ideal situation to make the most of lots of empty space to build lots of solar farms, which are then used. The electricity is needed to power your air conditioning when the sun shines. So it's like a perfect sort of renewable scenario.
Yeah. And China built, more solar power in the last year than the whole of the US ever. So it's not just the US that's happening.
Let's stay with the sort of the sustainability theme. I know that something that you've announced fairly recently is that you're investing in timber, and I think that's really interesting because you can look at it two ways. You can look at it in that's great. You're doing impact investing, you're investing in something that is sucking carbon out of the atmosphere. But there is also questions about biodiversity and whether sort of monoculture plantations are going to actually create more problems around biodiversity. How do you think about your timber investment and what motivated you to do that? And are you doing that in the UK too?
So currently it's just, it's global, but happens to exclude the UK. UK's not great in terms of actually you mentioned sort of land mass. There's not a lot of space. So it's North America, South America, Australasia, kind of where we're focusing to start with. A lot of focus on not disrupting that biodiversity, and at the same time trying to make sure that forests are sustainable and actually safer. So most of the forest fires in the world are in publicly owned forests, which aren't well maintained, so they don't clear the brush below. So private forests are much better maintained. They have drones kind of looking for forest fires starting, etc. So the idea is we grow trees and we stop them burning down, and then you harvest them, and there's increased use
and you
of
don't
timber.
burn them down.
Exactly, and there's increased use of timber in construction now. There's things like high tensile ply, which is as strong as concrete, and we all know that concrete and cement are very carbon intensive. So we're kind of reverting back to the world as it used to be before we started drilling lots of oil and emitting lots of carbon dioxide. So we think there's a really good story about carbon sequestration, using the timber sustainably, and at the same time trying to preserve biodiversity.
And on that sort of natural capital theme in the UK, is that something you'll be looking at in the future, of ways to invest to protect biodiversity, or even thinking of sort of carbon credits and rewilding, things like that?
Yeah, so that's a potentially big subject for a short podcast. So in the UK, we certainly haven't ruled it out, but as I say, we've got over £6 billion a year of new contributions coming in. We need to deploy that efficiently and cost effectively, and therefore having big mandates in the private markets is really important. At the moment, so we're very conscious. We're going to try and measure the carbon sequestration, but we're not using it as an offset to our carbon footprint, and we're not selling carbon credits. Carbon credits have been described as the Wild West, just not regulated properly. At some point, of course, that may well happen, but at the moment, we are just going to, have a positive impact, and at the same time generate good returns for our members from those investments.
Is it more the Wild West than digital assets and Bitcoin or the like, or about the same?
Yeah, we haven't. Well, Bitcoin is another carbon intensive story. We haven't invested anything in Bitcoin to date, anyway.
Yeah. So let's move on then maybe to the final, because we're kind of like working our way through the ways you can invest in the UK in private assets outside of the listed market. Another obvious big issue that the Labour Party is trying to address is the lack of housing in the UK.
Yeah.
And along with your changes that you mentioned to planning in order to help big infrastructure projects, there is a sense of making big changes to planning regulation to allow more housing. But one of the issues around housing is that we don't have enough. We have on those two sort of streams of housing, whether rental and home ownership. Let's just stick to the rental market at the moment. We've got a situation where we have constrained supply, a very unprofessional market. It's very much sort of owned by individuals, and that's in vast contrast to other countries like Germany and the US, where they have a much more professional rental market. Are there ways we can change that in the UK?
Yeah, so we recently announced, excuse me, I'm about to cough. We recently, I hope I'm not going to lose my voice. Right, we recently announced a joint venture with PGGM, the big Dutch pension fund, and Legal & General, who manage all our property portfolios for us. So we are going to be developing build-to-rent accommodation, and it's to a really high standard. It's sort of, I sort of describe it as the industrialization of the rental property market. So, for example, the properties are built sustainably with a view to being net zero by 2030. So there's shared heating, Wi-Fi is included in the rent, gyms, workspaces, etc. So it's both desirable to live in and cost effective and efficient. So the idea is that the way the tenancy agreements are structured, it's very fair to the tenants. They get really good value, and at the same time, we are, by building rather than just buying existing properties, we are creating new housing. Now, it's only part of a solution, right? But helping fix the rental market will hopefully release more properties. The ones you describe as being managed by private individuals and not very well. So it should release some of those maybe into the buyers of the owner-occupied market. But clearly the UK needs to build more accommodation across the board, and we're trying to do our bit. But at the same time generate a great return for our members. So we'll be developing those properties and then holding them and renting them out. And the prospective returns are very attractive.
And of those properties, so because you're starting with a blank sheet of paper and you can get over some of the problems of, our incredibly aged housing stock in the UK, the oldest in Europe.
Yeah.
That you can make it modern, and that you can make it with, outdoor space, you can make it with communal workspaces, you can make it with, there's all kinds of ways you can go. Yeah. And obviously you can provide a lot of services to people around that too. So you can make it fit for 21st living.
Absolutely, and desirable places to live, and the target market for a lot of the properties is sort of maybe young professionals who've left university or left school and aren't ready or able to get onto the owner-occupied market. As you say, culturally, the UK is rather different to say somewhere like Germany, where people actually expect to rent for the whole of their lives, possibly. But what we do need is high quality rental stock in this country. But having said that, we have in those properties, so we are already owners of some through our property fund. Students, older people in retirement, as well as kind of a young professional cohort.
And are you building those in specific locations? You talked about young professionals. So are those properties being built in urban centres? Is it in London, or is it in second-tier cities or cities?
Well, we wouldn't describe Manchester and Birmingham as second tier, I'm sure, but those are the sort of.
Well, London is the capital.
Yes, so it includes. It is. We've identified, the top 20 cities around the UK where there's clearly an acute shortage of this quality rental property, and those are the ones we'll be targeting. We've got to find the sites, get the planning permission, etc. We don't buy anything unless we have planning permission. For certain councils, that's contingent on having a certain element of affordable housing as well. So the numbers have got to add up, but at the same time, there's some real opportunities, and we're working on the pipeline at the moment.
Okay, sounds fascinating. So final question for you, Mark. We've had a really good and extensive tour through your private asset portfolio and how it touches on the UK and elsewhere in the world. Without giving anything away, because I know you don't like to give anything away too early on, where are you thinking of expanding the investment universe next? And how is what's going on geopolitically and how our economy is changing, shaping that in terms of living in a more uncertain, less polarized world with possibility of higher inflation shocks, and obviously perhaps the biggest issue that faces the Western world and actually almost every country on the planet, really, and that's the aging population, which has all kinds of second and third order impacts on our economies and the way that our world and our working life is shaped.
Yeah, so I think when I think about where we're going next, it's actually continuing to build out the private markets portfolio. We're currently at 15% in private markets. We have a 30% target. So enabling that is our key challenge. So I don't think we're going to be focusing specifically on new asset classes, but we will be adding managers and sleeves to what we're doing already. So a good example would be we've got a very small US loans portfolio, mid-market loans. That market is burgeoning, and so we'll be hiring a US, one or two US loans managers in the new year. But that bit we talked about private equity related to the carbon, the transition to a low carbon economy, I think that's a real opportunity, and I think that's particularly true of the UK as elsewhere. The UK is one of the leaders in that transition to low carbon economy, because all the coal mines shut in back in the 80s, and I think we've finally stopped generating power from coal. So there's no reason we shouldn't be leaders, and why there shouldn't be those opportunities. So we won't just focus on the UK, but I think there's a great story there. And then in addition, we're thinking about how our membership engages and what they want. So we've run something called our Everyday Investor campaign. But the first part of that was we took some of our members out to the Hornsey wind farm in the northeast, and they just didn't realise that as part of their pension fund, they own a share of one of the largest wind farms in the world. We've just released some work that we've been doing with Legal & General in Poole. We are basically regenerating the Dolphin shopping centre, which, as you know, shopping centres have had a tough time. And so, for example, I think we've got space for 10 entrepreneurs to get rent and rate-free space in the shopping centre for 2 years, and to establish their businesses. And as a result of this, and sort of the impact on the local community, footfall's growing, it's becoming a more attractive place to have your shops. And so we're by doing sort of innovative things with our managers, we're actually creating better investment returns.
So that, I think, is a fantastic place for us to end our discussion. Thank you, Mark, for sharing your news story of the week and all of those insights into how you are thinking about investing in the UK and more broadly into unlisted assets. Listeners, I hope you enjoyed the show. And if you want to never miss a future episode, make sure you hit the subscribe button. Thank you again, Mark, and thanks for listening.